Hey traders, another video for you today. It is Tuesday, which means another trade recap. This one is going to be on the Nasdaq trade that happened on the 10th of December. And let's go through it step by step. And let's start first with the key level. Where did it react from? So there are a few spikes that I wanted to mark up from the 9th of December. As you can see, there's definitely a solid one there at the top. Got already mitigated during London session. POC as well during Asian session. This spike as well, beautifully lined up as well with dynamic levels, got mitigated. Beautiful reaction, but I was sleeping at that time, so I'm not looking at it. And then there was also this level right there, aligned with the dynamic levels. As you can see, I always talk about it. Candles a lot at the same level, which means a lot of volume, and then making the move in the bullish direction in this case. So I would like to mark up this level right there. And let's see what kind of reaction it gave on the next day. So let's zoom in. Let's put these indicators off. And also this one to make it a bit better. As you can see, perfect rejection from this key level. And when we zoom in on the footprint, you know what we are looking for. We're looking for a volume increase, a delta shift, and stacked imbalances. And as you can already see, when I'm zooming in a bit more, that we have quite the volume here. It's going from 637 to 1900, 1700. That's definitely volume increase. And we're looking, of course, for the delta shift. Since this is a buy opportunity, I want to see the delta going from red to green, because I want to step in here if we see a buy confirmation. Third one is, of course, the stacked imbalances. And as you can see here on the footprint, I'm seeing here a 7-0 at the last cluster level, and just above it, the imbalance 15-0. Strong enough. That second level always needs to be 15-0 or higher, not lower. But when it's 15-0 and higher, it definitely gives me the confirmation that we are having here stacked imbalances. So combined, these 3 points are definitely giving me the confirmation to step in that trade. So when are we entering? Like I mentioned, always after the candle close. So we had the candle close here on the 5-minute. I'm putting my SL just a little bit below the wick. And then enter it. And then I prefer to have it for 1.5 hour. Safest 1.5 hour what you can get. Because that means a quick trade. This case, it took a little bit longer. But we were definitely rewarded. We actually catch the trade together in the mentorship. One of the questions I had in the group was, how do you manage this trade? Because he was feeling a little bit of stress during it. The trade was almost hitting TP, but then it came back all the way to the entry price and even in the red numbers. He asked me, do I need to close it? Or what shall I do? And I told him that you can only give the trade a chance if you just run it. Literally saying like set and forget. The point is, when you are backtesting a strategy, you want to see if it's going to be hitting your TP, right? You want to know how much TP you can put on there, the RR, and how much the win rate is. But if you are doubting during a trade, it just means that you are lacking the data. So the more you're backtesting it, the more data you have, the more confidence you're also going to get during the trade. Which means you put the trade open, you followed your trading plan, and you're going to give this trade the full opportunity to run. And the more you do that, the less emotions you're going to get. And remember, we're still humans, so we're still going to get these emotions. But just let your trade run. If you got questions about this topic or about the trade, just let me know down below in the comments, and I'm happy to help you. I wish you all a very good trading day.